Today, I've analyzed a company whose stock has skyrocketed over 1,600% in the past 5 years and more than 350% in the last 6 months, yet it still remains in a very early stage within its sector. So, let's jump straight into it. Bitfarms Ltd is a vertically integrated Bitcoin mining company. It primarily operates Bitcoin mining through data centers with access to underground electricity across Canada, the United States, and Latin American countries such as Uruguay and Argentina. But this isn't your usual mining story. Bitfarms is going beyond traditional Bitcoin mining by implementing new strategies, expanding into high-performance computing systems, and developing artificial intelligence data centers. For example, in the company's latest quarterly report for the end of 2024, CEO Ben Gagnon stated, "Bitfarms has completely transformed since the beginning of 2024. We've evolved from being an international Bitcoin miner into a North American energy and computing company. As part of this transformation, the company now holds an energy portfolio of 1.4 gigawatts, with roughly 80% of its energy supply based in the US. At the same time, Bitfarms is working on new HPC and AI data centers, such as the 350 MW Panther Creek campus being built in Pennsylvania. Bitfarms has also diversified its energy sources, relying 100% on renewable power, specifically hydroelectric energy in Quebec. The company's long-term goals focus on establishing sustainable revenue streams in the US and reducing dependence on crypto. In recent years, Bitfarms has shown rapid growth, reflected in its improving financial performance. In 2024, the company's total revenue reached $192.9 million, marking a 31.8% increase from the previous year, while net loss improved by about 50%, decreasing to $54.1 million. In the final quarter of 2024, revenue rose to $56 million, a 21% year-over-year increase, while gross margin fell to 47% from the previous quarter's 57%. During this period, the company's corporate hash rate reached 18.6 EH/s, a 186% increase compared to the end of 2023. Energy efficiency also improved by 45%. The key factors driving revenue growth include $35 million in income from previous quarters and reinvestment of capital. Bitfarms continues to support its growth strategy through financing initiatives. In October 2025, the company announced a $500 million convertible note placement and secured a $300 million credit facility for the Panther Creek project, clear signs of its expansion plans. The balance sheet remains solid, with approximately $144.5 million in cash and $74.9 million in debt. This results in an enterprise value of around $0.18 billion against a market capitalization of $2.49 billion, highlighting the company's strong financial stability and low debt-to-cash ratio. Although still unprofitable, Bitfarms continues to show improvement in both revenue and margins, pointing toward a positive trajectory. At the same time, Bitfarms has refreshed its portfolio through strategic acquisitions and partnerships. In early 2024, the company acquired its biggest competitor, Stronghold Digital Mining, strengthening its focus on the North American market. It also sold the 200 MW Iguazu data center in Paraguay to Hive Digital, increasing liquidity. These moves helped Bitfarms concentrate its investment portfolio in North America and enhance financial flexibility. Speaking of Hive, this is a good moment to remind you, over the past year, I've analyzed and shared more than 50 companies with you, including names like AMPX, Rigetti, Wolf, and Hive, all in their early stages. Most of them have brought us hundreds of % in return since then. If you don't believe it, go check out my previous videos, you'll see them all, and you can benefit from these opportunities too, because many of these companies are still in their early growth phases. Another thing I want to mention, by the end of October, my goal is to reach 1,000 subscribers. If we hit that milestone, I'll reveal every single company I currently hold in my portfolio, the ones that have already taken off and made me serious profits. So if you're interested, make sure to subscribe so we can reach that goal together. Now, let's continue. In January 2025, Bitfarms signed a partnership agreement with Appleby Strategy Group and Worldwide Technology to collaborate on high-performance computing and AI strategies. ASG and WWT will provide advisory support to help convert the company's existing sites into HPC and AI systems and offer these capabilities to potential clients. CEO Ben Gagnon emphasized that these partnerships are crucial for unlocking the full potential of Bitfarms' 1.2 to 1.4 gigawatts energy portfolio. Additionally, Bitfarms secured a $300 million loan from Macquarie Bank to fund the Panther Creek data center, specifically for the project's infrastructure development. All All these steps align with the company's strategy to diversify its energy mix, establish long-term AI contracts, and broaden revenue streams. In mid-2024, Bitfarms underwent a leadership change, with Ben Gagnon replacing Emiliano Grodzki as CEO. Under Gagnon's leadership, the company has focused on North American energy assets and on building out high-performance computing and AI services. Gagnon stated that Bitfarms aims to fully leverage its 1.4 gigawatts of energy capacity to develop energy infrastructure and commercial technologies in the AI and HPC sectors. CFO Jeff Lucas added that investments are shifting away from traditional crypto mining and toward energy, HPC, and AI infrastructure in the US, which should provide long-term income stability and improve operating margins. Bitfarms has also strengthened its leadership team with experienced professionals such as James Bond, Vice President of HPC, and Craig Hibbard, Vice President of Infrastructure. The company's key goals include converting Panther Creek and other U.S. facilities into AI data centers, expanding engineering resources, and capitalizing on competitive electricity rates. For instance, its 18-megawatt site in Washington is being transformed into a location offering some of the lowest electricity costs for AI operations. These steps are all part of Bitfarms' strategy to optimize energy infrastructure and build a long-term competitive edge in the AI sector. Wall Street analysts generally have a positive outlook on Bitfarms stock, though forecasts vary by source. According to TipRanks, the company holds a strong buy consensus with an average one-year price target of $6.33, implying about 52% upside from current levels. Meanwhile, Compass Point's new analyst Joe Flynn maintains a buy rating with a $7 target. On MarketBeat, analysts are a bit more cautious. Among 8 analysts, the average 12-month target price stands at $4.35, reflecting a potential 5.6% downside risk, resulting in a moderate buy consensus. Stock Analysis, based on 3 analysts' ratings, also gives Bitfarms a strong buy, but with an average 12-month target of $3.83, suggesting a possible 16.9% drop. Barchart lists Compass Point's $7 target as the highest, while the overall average target remains around $4.63. Zacks Investment Research highlights Bitfarms' 205% growth over the past year, outperforming rivals Marathon and Riot, and notes that investors are optimistic about its AI and HPC pivot. Overall, analyst projections are wide-ranging, with bullish targets between $6 and $7 and more conservative ones between $2 and $3. The difference in opinions mainly comes from short-term trading factors, new project launches, and peer comparisons. MarketBeat also notes that only 4 new analyst reports have been published in the past 90 days, suggesting limited coverage for now. While analysts' short-term outlooks generally align with 12-month targets, Bitfarms' shift into AI computing could potentially lead to higher long-term valuations. Over the last 5 years, Bitfarms stock has risen by roughly 1,600%, and in just the past 6 months, it surged 352%. This momentum is tied to the overall volatility of the crypto market, Bitcoin's price increase, the halving event, and the company's strategic pivot. Since late 2024, the announcement of its AI and HPC initiatives, new energy contracts, and $800 million in capital funding have all fueled investor interest. According to Benzinga, the company's shares have jumped over 70% in the last month alone, with investors strongly approving of its new strategic direction. The entry of major U.S. funds buying shares and the decline in short positions have supported this rally. Speaking of short interest, MarketBeat reports that short volume is around 9% and trending downward. As for the reverse split rumors, no such move has taken place yet. Although shareholders approved a potential 10-to-1 split authorization for June 2025, the board hasn't executed it. So, while the proposal exists, it hasn't been implemented, and the current rally isn't artificially driven. It's based on real market and fundamental factors. And before I wrap up, I just want to mention, if you'd like to get up to $30 worth of free stocks or crypto, you can register on the Quantfury platform using my invite code via the pinned link in the comments. And if you enjoy my videos, you can also buy me a coffee using the other pinned link. That's a great way to support the channel and help me stay motivated to keep making more content for you.